Good evening, everybody. Hope everybody had a pleasant holiday season. I was just telling Jim that my excitement was watching Pokemon movies or things of that ilk. Sandy's grandkids were here, and it was the proverbial, it was good to see him arrive, and it was good to see him go. So, all right, what we're going to do tonight is uh, go back into a little bit deeper analysis of what is the market telling us. Now, usually the market tells us that after the first of the year, with the last couple of weeks just kind of being nothing weeks for most of the big money investors, but they're using that time to evaluate what the prospects are for going into the new year. So today the market, as you saw, was up 119 points, which really didn't show us what sectors were kind of blasting off, because that was pretty much kind of the continuation of what was going on for the past month or 2 months, I guess, since Election Day. But it did show us that what had been building up confidence over the last 2 months was still there. So if you do your scans, and I can't do them on here, but if you do your simple scans for sectors, as far as which ones are performing the best, it was pretty much the same thing in today's trading as what we'd already seen. That the oil and gas stocks were doing well. Gold stocks, which had been lollygagging for the last few weeks, had started picking up steam over the last few days of trading, especially today. The building sector and the shipping sector were all coming on pretty strong. So what we want to do is increase font size. This kind of works. All right. What we want to do is kind of take a look at what is the psychology of what was happening today based upon everybody's evaluation over the last 2 weeks, which was pretty much, again, staying with the sectors that had been acting well during this past rise. So here's the one element that we have an advantage of. Even though the market was up strong today, and it was indecisive, we as candlestick investors can look at this and say, all right, this has a prospect to it, and that prospect would be our simple rules. We know that if it opens positive tomorrow, they'll probably be trading positive. If they're trading positive tomorrow, what do we got setting up? A flutter kicker. If we've got a flutter kicker signal setting up, it tells us we have more upside. Plus, we can see that we've got kind of a flat handle and a scoop pattern. And what do we expect coming out of a scoop pattern? Usually more upside. So we've got at least analytical parameters knowing what should happen after candlestick signals and what type of patterns they could be forming. So that, again, puts us into kind of the evaluation of same scenario on the NASDAQ, that if they open this positive and get you back up above the T-line, that this big steady uptrend is still in progress. So the other elements we can look at is what commodities. Gold, as you can see, is starting to base in here. And we're going to go through the gold stocks to show why that's confirming. Some of the other, real quick, we're going to just jump through the commodities that we're trading. Now, we were trading lean hogs, and you can see what type of patterns it was setting up. So it opened positive today. What should that have told us about, are there scans? I can create my own searches. Yes, Lewis, that's the whole point of this website, is getting you set up to where you do your own scans. So when I put out 2 or 3 stock picks a day, those are just what I have found to be some of the best opportunities. But that's based upon the type of things that I'm looking at. What we want to teach everybody is how to do their own scans so that they can find the trades for themselves. And everybody's universe might be different. One person may only want to trade stocks that are trading above 50 and have options. Another person may only want to trade stocks that are trading between 50 cents and $2.50. So you can set up your own universe. So today it was very simple. If this opened positive, what should this pattern been telling us? We should be going in this direction. So when it started trading up and came back down through yesterday's or Friday's close, we stopped out with a very simple entry and exit strategies, which we will be doing here in the next few weeks for members. But very simple. If it came down through here and came down and then came back up, we know the consolidation's over. We could be buying right back again, knowing that it was confirming our pattern. On the other hand, if it didn't come back up, no harm done. We stopped out here, get ready for another trade. That is a bearish engulfing signal, yes. So that told us that that if this was a J-hook type pattern, that we should be moving in this direction. We just stopped out for that simple reason, that if it came down through and then came back up, we could always buy back in. It protected us from holding on to something that looked like this. Same scenario on lean hogs. I'm sorry, live cattle. That was lean hogs we were looking at. There was a left-right combo on Friday. Closed below the T-line. Opened positive today. Does that tell us we want to be going short? Definitely not. So where's a very safe place to go short? If it opened positive, you just put your sell stop below where it closed on Friday, because logic says if this opens positive and starts coming back down through there, you've got another red candle developing, and more than likely you're confirming the sell signal. Where is it likely to go to? Well, it might have come back to the support level. Whoops, make this a little bit smaller. But there's kind of a trend here. If it breaks this trend, where's our next target? Probably down here to the moving averages. So that'll be, we're going to be going into taking the emotions out of your trading over the next couple weeks with different elements. Thursday night, we're going to be working on how you set up your positioning as far as your money management, so that you're not letting emotions affect your entry and exit strategies or what positions you're holding on to. You let the mechanics do that for you. Okay, so again, we saw that gold starting to pick up strength. We could see that by the pattern that was setting up in Nugget, kind of a scoop pattern. Everybody was kind of worried on Friday that should we get out of this? Well, the pattern wasn't over. We had a potential sell signal, but we weren't up in the overbought area. So what did we need to see to tell us that gold had fizzled at this level? You need to see it open lower and start trading down. The fact that they opened up positive and trading positive told us all the gold and silver stocks were probably doing the same scenario, kind of a bobble. Here's AG. Notice how this one started with your best friend signal, gapping up, failing at the 50, pulling back to the T-line, you can still be buying this one on positive trading tomorrow, or if you want to be a little bit more conservative, be buying this one if it closes up above the 50-day moving average. That tells us our bobble breakout has occurred. So that was AG, AU, same scenario. AGI. All of these have hit resistance and then hit support and still heading up. So we even recommended going short on gold rand gold, had it open lower today. That would have told us that the 50 was acting as resistance on this bearish engulfing signal. Now, the only reason that you want to have a little bit of suspicion that a signal is not quite a signal is notice where our stochastics were at the time. They were not in the overbought area. So all they did was do some consolidation once they broke through the 50-day moving average. And so what was our criteria if we were long or if we were going to go short? If we were going to go short, we needed to see the prices open lower today. If you were long, you didn't cover your long position until you saw it open lower and start trading lower. Right now, all this has told us is there's consolidation here at the 50, and this bullish ROMIC told us that the selling has stopped. Oh, I don't know what to tell you, Ken. Jim, can you help Ken? Okay, so if we know which sectors are acting well, this is why identifying, here's is showing gold. Jim, why wouldn't everybody be catching up? Yeah, you might have to log out and log right back in. Slow internet. All right. Yeah, we're on Whiting right now. Notice what Whiting did today. Kind of a prelude to a bullish kicker signal. So if this opens positive tomorrow, got the bullish flutter kicker signal, and they break out through this level, that tells us we're in the next wave to the upside with a strong signal showing that we're coming out of this range. So a lot of the oil stocks, Carbo Ceramics, still in an uptrend. CVI came back. Notice where it consolidated to. This is why we always want to see if you stop out. A good place to have stopped out was at yesterday's or Friday's open. What's the worst case scenario? It comes down and comes back up. You can always buy back in. Bruce, hang on to your individual situations until I tell Jim to do the double line. And then probably tonight, with my throat still being a little bit dicey, everybody just come up with one stock they'd like to look at. So CVI, still in an uptrend. And notice how this one started with your best friend signal, gap up, J-hook type pattern. So recognizing the patterns and the signals give you that tremendous advantage knowing what is likely to happen on the next move. There's their best friend signal. Where is our next likely target? Coming back up here to test the 200. If it goes through, what type of pattern do we have? We have a bobble breakout, and the bobble is where you come up, hit your resistance level, pull back to your support area, and then go back up through the resistance level. That's a high probability that the breakout has occurred. And now what does it become? It becomes a J-hook pattern with much more defined entry and exit levels. So the advantage we have with the room is that you don't have to do your own scanning necessarily. There's lots of people in the room that are doing their scanning. I think David L. came up with LVLT today. Notice the kicker signal at the breakout level. Tells us that we're probably in wave 3, so we expect a 45-degree to come off of here. And this is where you observe the obvious. This is CVS. May not be a real dynamic mover, But notice what's happened here. The 50 acting as resistance. What do we have today? Your best friend gap up through that level, telling us that this 50 is not acting as resistance anymore. You're probably wave 1, wave 2, wave 3. Bob, yes. When all the patterns are all of them are looking the same, that pretty much tells you they're being bought across the board. That the big money is buying gold stocks or silver stocks. So if you know that they're being bought across the board, that puts you in a little bit more safe position. Again, putting all the stars in alignment, basically saying if we know which way the market is moving, we know which way a sector is moving, and then we can see which are the best in that sector. That just puts everything in your favor, that you're not picking out something that might be a just I don't want to say aberration, not an aberration, anomaly, that they're all moving in the right direction. So here's another kicker type signal on ESV. Makes this very simple. If this opens positive tomorrow, you can see how this kind of wedge area is breaking out. Makes for a high probability trade, especially coming out of a kicker signal up through the T-line area. Let me make sure I've got everything over in this column. Okay. Now, we recommended AKRX today because there's kind of your little J-hook pattern and where it's open above the 50. Now, it got a little dicey, but notice where the diciness came to, right smack dab to the T-line. For those new folks in here, if you take the evaluation of a candlestick signal is the accumulative knowledge of everybody buying and selling during a specific time frame, showing you what the investor sentiment is. And then you take the T-line. Now everybody has the 200, the 50, and the 20 on their charts. That's why they everybody watches to see what's happening at those levels. The T-line, nobody has that on their charts. So when you see the price moving right back to the T-line, that kind of tells you you've got something that's acting like a Fibonacci number, a natural support and resistance level. So when it comes back and pulls back right to that level, that's telling you that that's the natural support level, and it's coming back up. So what do we have now? We recommended this stock today on positive trading. But what happens if this opens positive tomorrow? Now we've got a doji sandwich that's telling you we've got the prospects of another big day like this day right here. Now, once again, this is part of the training that we do, is kind of rehashing the signals and patterns that are going to give you high probability trade setups. On Friday, put out the message that we had a best friend signal in Mobley. It broke this down trending channel. It did it with a best friend signal. Friday, it did a doji. Again, what's the criteria for a doji? It's going to move in the direction of how they open after a doji. And when they open up positive, it tells us which way they're going. Now, a doji sandwich has a pretty good prospect that if they open up positive, the magnitude of this candle right here is going to be the same as this magnitude of this candle right here. So to improve your probabilities, whether you're a swing trader or a day trader, knowing the simple rule of doji that it's going to move positive, and knowing what the doji sandwich looks like, puts you in situations where your probabilities of being in the right place is extremely high, number one. And number two, being in a position where the return is going to be extremely high based upon the evaluation of the previous candle. So that puts you in high probability situations with good results coming off of them. Just dramatically improves your profitability. If you can see the little Morningstar signal, right smack dab off the 50 with your stochastics in the oversold area, what's that tell us about this trend? More than likely, we've had wave 1, wave 2, right smack dab to the 50. Wave 3 should be the same magnitude as this move right here, which looks like about 4 points, somewhere up and around the $15 range. So if you can identify when the trend is starting now, and you can see by confirmation of how they open the next day, not only do you have an opportunity to be in the right trade at the right time, but you can plan what type of, how you want to maximize your profitability from that trade, which in this case may be, if you know your upside potential is 15 and you've got 3 weeks to expiration, you might decide to do a spread, which is going to give you a much better return based upon knowing where your upside target will be. IDXG, big breakout move, profit taking. But what do we know about profit taking? If they open it positive after having a big upside shadow, it tells you the profit taking is over. They're still in the process of taking it up. QHC, there's your Morningstar signal. And what's our simple rule of the inverted hammer? A positive open after an inverted hammer, the probabilities are extremely high, like 95% or greater, that you're going to be continuing the uptrend. So notice what type of pattern you've got here. You've got the Morningstar signal. You've got the inverted hammer being confirmed. You've got a little scoop pattern, which means your next move could be a good slingshot effect to the upside. What one was that? I'm going to put a little star next to that. You might see that on the recommended list. So again, everything that we want to be looking at right now is observing the obvious. Where is there obvious change of investor sentiment? VRX, big downtrend. And we had a left-right combo after 5 dojis in a row. Remember, if one doji means indecision, a series of dojis means greater indecision. Left-right combo is an extremely high probability reversal. Doji, that little left jab, the bullish engulfing right after that big roundhouse right, taking the trend into a new direction. So knowing the signals and knowing the other parameters that something has changed just puts you in a much higher probability situation. And that's why we want to recognize the patterns. Here's our fry pan bottom on CETX. Fry pan bottom here, bigger fry pan bottom. What do we expect coming out of a fry pan bottom? Notice where this fry pan bottom pretty well started. What did they do to get there? They gapped up through that level. And what do we expect coming out of a fry pan bottom? A very strong price move. How long do you hold for this profitability? Well, again, what's our simple rule? You can stay long as you stay above the T-line, with the caveat that the further away you move from the T-line, the higher the probability it's going to come back and test it. So if this opened up tomorrow and was trading up here, look how far away it would be from the T-line. That's when you flip to your 10-minute chart and start getting ready to take profits if it starts showing the sell signals on your 10-minute chart. AGN, you can see what this pattern was. Nice fry pan bottom. Now they gapped it up. So again, when we do our stop loss session, where's the logical place to put a stop loss if you're up in the overbought area? Right now, they gapped this up. They filled the gap. Price still has more upside, but just as a safety factor, I'd put my stop right here, because logic says if they come back down through that level, the sellers are starting to take control. They're probably coming back to the T-line. And MPET, we recommended last week because of that fry pan bottom. Notice how they broke out of this level. with a kicker signal. How long do we hold this one? Until we see a sell signal and a close back below the T-line. Again, this is not rocket science. This is just doing what the Japanese race traders have illustrated for years as how investor sentiment usually works. What do we expect coming out of a fry pan bottom? Very strong price move. Again, notice right about in this area when everything started to get a little bit iffy. Big gap up through that level. Now what do we expect after a strong price move? Oh, Fletch, I've been eating soup. Now, I don't know what I'm taking. Sandy only gives me about 80 or 90 pills a day. I'm a heck of a lot better, but I got a lot of good nap time in over the holidays. So we expect a J-hook pattern. That's your classic. Fry pan bottom creates a very strong price move. J-hook pattern, what's a prerequisite for a J-hook pattern? A very strong price move. This one can be bought on positive trading tomorrow with the expectation that wave 1, wave 2, going into wave 3. Blackstone, to your little slow curve, breakout. Pulls back, and then you have your hammer gap up. I get ready for the next move here because of that, the gap up from a candlestick reversal signal. Anytime you see a gap up, this one is Depot. It was trading positive after hours. If this opens positive, what's it telling us after this big gap up? They aren't resisting here. They aren't resisting at a downtrend. There's a lot of upside potential. Anytime you see that big gap up, remember that gap is telling you there's a new force coming into that price move. And if it's coming after a candlestick signal, it's that much more compelling. HSC. There was your inverted hammer. There was your bullish confirmation. What did the positive open tell us the next day? First of all, it told us it was confirming that the uptrend was in progress. Secondly, it was telling us this was not acting as a resistance level anymore, that there was more upside. Notice what happened after that. A doji sandwich. Where did this doji sandwich occur? Right at the last peak. So how long do you stay in this? Notice where our selling really started. Left-right combo, kind of a tweezer top. What was our worst case scenario? Came down. You could always buy it back when it came back up through the T-line, which it's doing over here. So I'd look for the next, where would be the logical spot, Elliot? Where wouldn't you want to see this close on rig? Probably back below this low, which would also probably coincide with closing below the T-line, right? Let's see, we did the oils. Let's see, I don't know whether we did CPE. There's that right smack dab off the 50, a doji gap up. You could do it below the low of the last day. What you try to do is just the logic. It says if this is where strong buying is coming in and that we have a pattern setting up, a J-hook pattern, what would destroy all that? A close back below the low and or the T-line. What would that tell us about our trajectory? Well, this had disappeared and you're back into this. You don't want to be there. All right, Fletch, I will grab some. Let's see. AVH, J-hook pattern. And the reason that you want to identify the patterns is all boats rise in a rising tide. Except the patterns are going to rise a heck of a lot faster. So if we know the markets are moving in a direction, we want to find the ones that have the strength to move a lot faster while that uptrend is in progress. IMGN, another one that has broken out. Don't usually trade the low price stocks, but the volume is good on this. We had a kicker signal, consolidation, doji. Makes it very simple. If it opens positive tomorrow, got a doji sandwich after a kicker signal. Remember, anytime we see that strength coming into a trade, there's our best friend, doji sandwich. Just puts the probabilities in your favor. IMGN, don't know. All I know at this point would be it would be in an uptrend until we see a sell signal. So Guild, I don't trade very much. It had an up day, but you can see what the chart is on Guild. There's nothing here to make it very compelling to be tell you that you want to be in it. As a matter of fact, it looks more like a wedge formation. So I wouldn't be too enthusiastic about that chart right now. What you want to do is you want to find charts that you can see that there's a big prospect of high profit. So again, there's wave one. There's your J-hook pattern. So if this was looks like a 13-point move, a 13-point move from here would basically put you up in about the $60 area on the next wave. So those are the things that give you much more indication that you're going to get a strong price move versus just something that's slowly moving along. So when we first did our scans to see which sectors were acting the strongest, again, it was oil and gas, gold, building material, and shipping. So on something like, yes, I could hold that right up, couldn't I? On something like TCNet, I come over here and say, all right, I want to go to all my industry groups, and I want to see which ones open the most positive. For some reason, that's not wrong. That's more like it. But if I can go down, there's silver, there's the oil and gas, the kicker type signal. There's healthcare information. There's gold. Building materials, Morningstar signal. Now what you can do is you click on here and say, all right, take me to what's in that sector, and it's just over here. But you can start going down and say, all right, these had the biggest percent moves today. So essentially what you're doing is you're finding the sectors that are working the best, and then going in and finding which stocks in that sector are working the best, which I've already done. Things like Louisiana Pacific, Morningstar signal with a gap up. Good prospect of coming right back up to test the highs. And MCK, big bullish engulfing. Bobble breakout. Where's your next target? First of all, you're probably going to fill the gap. Second target should be the 200-day moving average. ANW. Whoops. ANW. Which usually reminds me of root beer. Notice how it's supported right here on the 50. Now did a doji gap up. There's a gap to fill here. Probably lots of upside potential on this one. GV. There's your fry pan bottom. There's your breakout. There's your J-hook pattern. What started your J-hook pattern? Big bullish engulfing. Still probably in a good uptrend. Another sector was the shipping sector. So one's in the shipping sector. This is CGI. Doji gap up through the 50, through the T line, through the 200 right back up in this area. That strength probably tells us we're in a 45 degree off of here. SALT, another bulk shipper, another gap up. Notice where it gapped up. Oh, I hate that thing, and kick your grandmother. Trend. Broke out through that level. Tells me there's probably more upside to this one. DOL, a little bit light on the volume, but you can see how it came up, hit the resistance level, did a kicker signal. Next target should be up here at the 50-day moving average. So I'm showing these because you can do your scanning by going right down the list. Which way do we think the market is going? Which sectors are acting the best in that that trend? And then which stocks are showing the best patterns in that trend? Or in that sector. Not quite a cradle pattern. Usually a cradle pattern, you'll see a downtrend, a cradle pattern, but that's kind of more what I would call a bobble breakout, where it failed, came back, didn't move away from the T line, now broke through. But it doesn't really matter what you call it, as long as you can see that, especially after a big series of indecisive trading, they've told you what their decision was. TK Offshore, another shipping. There's your bullish Harami gap up. If it comes up through the 50, you got some running room. And RRPS, notice the little kicker signal starting the next wave. So you've had wave 1, wave 2, wave 3. Now wave 1, wave 2, wave 3 should bring you back up at least to this level, possibly the same magnitude as this move right here. So essentially what we're looking for is high probability patterns that are being created by high probability signals to tell you there's going to be more upside. So knowing what to expect from a signal, we were short SSYS because notice where it failed. Right here at the 50, closed below the T line. Stay short, stay short, stay short. Except, whoops, now what do we have down here in the oversold area? A doji. Maybe on a support area. So what's our criteria? Shouldn't trade above the high of the doji. If it did, it tells us there's a lot of strength. And if they trade above the high of the doji, where do you think the next likely target is going to be? Probably back up to test the T line. Is it going to stop there? I have no idea. But the probabilities say if we're trading up above the high of that doji in the oversold area, the bulls will step in, close out your short position. Now you've got a situation where you've got your best friend signal closing above the T line. Where's your next target? Right up here. That may not be worth the risk reward, knowing that you've got a lot of resistance. I want to find something that has more upside potential. Same scenario on ERII. Another one that failed right at the 50. There was our left-right combo, closed below the T line. Short, but look where it started supporting, right here. What was our criteria in the oversold area? It shouldn't trade up above the high of the doji, and or if it opened positive, it was probably coming up to test the T line. Close out the position. Now, what's the worst case scenario that if this is just a bounce, you close out the position, comes up, fails, comes back down, you can always re-short it, knowing that it failed the T line and you're still heading down. Las Vegas Sands, we shorted last week, a couple weeks ago. Whenever you have a big break like that, notice that's kind of your evening star signal and your hanging man. They've never been able to get back up above the T line. Still likely coming down to test the 200. You just stay short until you see a buy signal and a close above the T line. We're short if we saw it trade positive tomorrow, probably cover the short position. You can always re-short it if it fails at the T-line. And we shorted Twilio. Once again, notice where it failed. Dark cloud, right smack dab at the 50. Then it closed below the T-line on your double doji. What's it tell us? It tells us we're still in a downtrend. Just stay short. So there's a few more that even though the market is heading up, they're rolling over. Chemet, you can short this one if it opens weaker tomorrow. Where's the likely target? Fill in this gap right here at the 50-day moving average. Not all oil stocks will perform. Whoops. For example, Rice, one of the oil companies. Notice what it's doing. There's your dumpling top. There's your bearish doji sandwich. Where's your next target if this starts trading lower? Well, there's wave 1. Wave 3 should take you down in this range. Does a long shadow on Tukey can mean anything on today's shadow mean anything on LVS? I told you there could possibly be a reversal, but what do you need to see? Confirmation. Carl, that's right. So, yes, that's telling you start getting prepared because that's a potential reversal signal, your hammer signal. Oh, there's your doji gap down. Remember, that's your bearish best friend. I told you there's more downside. All right, so anyways, we've got 4 sectors right now: oil and gas, gold, building material, and shipping that you probably want to have a little bit heavier allocation of your portfolio. Thursday night, we're going to be doing a little bit of ad lib analysis of how to keep your emotions out of your trading. And part of that is going to be how you allocate your positioning so that you don't have your emotions involved. And again, these are just kind of techniques that I've used through the years because being the worst investor in the world, I had to figure out how to keep my emotions out of my trading, which was always goofing me up. So with that, I've got stars next to a couple of these right now, which we'll probably see as recommendations. That little scoop Morningstar signal, probably more upside. And I'm trying to think which one had that. Not NVIDIA. Oh, AMD. Notice that little scoop J-hook pattern. Had some good profits in that trade. Yes, yeah. You can be the best analyst in the world, identifying exactly where to get in, but if your emotions dictate how you do your trades, you're not ever going to make any money. I learned that a long time ago. How do you judge a price target on stocks that are at all-time highs? No overhead, just follow the T-line? Well, usually it's a pattern type situation. Yes, and the T-line becomes your criteria. Your number one criteria, though, is you hang on until you see a sell signal. Now, it's more confirmed if you see that sell signal and a close below the T-line. But if you're trading fairly close to the T-line, you want to see it close below the T-line. If you get to a situation where you're trading well above the T-line, now you use the signal as your number one criteria. Further away you move from the T-line, the higher the probability it's going to come back and test it. Okay, and the other one, I think, was AVH. J-hook pattern. That's pretty strong. And if you got stopped out, and this is going to be part of our conversation on Thursday night, I would say probably 1/3 of my trades don't work. I would say another 1/3 of the 2/3 that are working, I'll get stopped out once or twice. But if I get stopped out of a trade, because when it was trading down here, it didn't look good. But then see what it did by the end of the day. You can always buy back. So you missed out on 48 cents. But that 48 cents is insurance that you're not holding on to something that's going to take another $2 away from you. That 48 cents doesn't really mean anything if our next price move is another 5-point move to the upside. So we will be going into the, again, that's part of the emotions, how to get out of a trade when it's time to get out, and getting back into a trade when it's time to get right back in again. Which book is your best to buy? Oh, SD, I would start off with High Profit Candlestick Patterns and then move to kind of get a follow-up or get more solidified by Profitable Candlestick Trading. And then once you have all your patterns and signals so that you can identify them, then do the third book, Eliminating Your Emotions Using Candlesticks. You put that combination together, you're going to trade a heck of a lot better. Again, I keep telling people I was the worst investor in the world. I was even a stockbroker for 8 years. And I realized that the brokerage firms had no more idea what made stocks go up or down than anybody else. Their criteria was buy a good company that has good sales and good management and hold it long term, and you're going to come out ahead. You are if you could sit and not worry about what your investments are doing versus trying to have your investments make money for you while you're still living. SD, I'm probably not the best trader in the world, but I live in a nice big house. I've got 22 classic cars. I've got an antique, a double antique or antique Victrola collection double because I brought collections from Houston up to my collection here in Pittsburgh. So I would say I'm a decent trader, and I would probably even be a better trader if I could spend full time at it. And but I don't want to do that just yet. I'll do that when I'm ready to put up my feet, sip scotch during the day, and just trade. Okay, Jim, go ahead and do the double line. And in 2.8 seconds, do the next double line. Okay. So one of the things that we're going to be showing people is if your chart is doing nothing, close it out. Now, Kara, I probably wouldn't be long or short. You can see there's no direction to it, even though it's got a little buy signal. If you're buying, you got to be very aware that you've got a wedge formation. So right now it's not doing anything fantastic. If you're long, you can stay long. But if I was buying it, it probably wouldn't be high on my buy criteria at this point. PZRX. All I can hope is that your volume is pretty strong on this one. Another one you can be buying, but you definitely want to see bullish trading breakout of this congestion area. BCC, this one you can buy. Kicker type signal breaking out through this level. Wave 1, wave 2. If wave 1 was probably about 7 points. Look for it to move up into the $30 range. ADPT. That one, I think, broke out nicely. You can be buying this one, have a little kicker breakout signal, and I would suspect once it gets back to this level, you're going to be running into the 50-day moving average. You just see what happens at that level. And HBM, another one. There's your inverted hammer. This one you can be buying. That's a good-looking chart. This is your classic. Fry pan bottom, strong price move. J-hook pattern. In this case, they pulled it all the way back to the 50. This move was about 4 points. Look for this to go to the $10 range. I'm going to keep that one. Nordic. Nothing to get excited about here. No direction. Probably would not be long or short this one until it breaks out to the upside. I'd probably be more apt to be going after something like salt, where you do have the breakout already. And DRYS, dry shipping. Oh, boy, that was the one. Yeah, there's nothing there. That went dead ever since it went from 4 to, it got up to 104. Don't know whatever happened there. But had a couple people make some very good profits on that on the way up. I wouldn't be long or short right now. There's nothing there. ACAD, another one that doesn't really have any great dynamic to it. You definitely need, if you're in the bobble, because it hit the resistance level, can't close below the T line. If I was going to buy it, I'd be more apt to buy it coming back up through the 200. GSAT, this one you can be buying. Just make sure your volume. There's your classic fry pan bottom, J-hook pattern. Little bullish Harami gap up. You can be buying this one. If I was buying this one on positive trading tomorrow, I wouldn't want to see it. Probably wouldn't want to see it trade back below the halfway point of this candle. OCN, stay long. Not anything real widely exciting, except you've got a nice steady uptrend. You just stay with it. SGYP, getting a little bit toppy, and you got to be a little bit skeptical, suspicious right about this level. So you have a doji. You're getting toward the overbought area. If you're long, look how far away you've started to move from the T line. If it started trading lower tomorrow, I'd take profits if I was in it. And you've got a doji up here getting toward the overbought area right on a resistance level. LEU, stay long on this one. All the indecisiveness here, just make sure your volume is good. The VIX, stay short. You can see the kicker type signal to the downside. So this is a case where a bullish kicker signal shows a lot of strength to the upside. The bearish kicker signal says there's going to be more move to the downside. TSXP, little J-hook pattern. Next target should be the 50. I'm sorry, the 200. Unlimited, another one that you can be buying. Notice your left-right combo breakout through this level. I would suspect your next target is up here. CVRR, stay long as this stays above the T line. And if you're going to be a buyer, buy it just above this level, that would tell you they've broken out into new territory. GBTC is not working for some reason. Coffee is not really doing anything of any great consequence. If you were short, should have covered the short position over the last couple of days. I wouldn't be going long yet until they can get back up above the T line. Tezar, nothing. Wouldn't be long or short this one. It's stuck. Sanchez, this one I'd be more apt to buy above today's high, knowing that it broke out through this little downtrending channel. Falcor. There's your doji sandwich, breaking this downward trend channel. That one I'd be a buyer of. Remember what the results of a doji sandwich is, usually more upside. The Qs still needs to see positive trading tomorrow. If it opens lower, still telling you they can't get through the T line. So just like the NASDAQ, or that is the NASDAQ, pretty much want to see this open positive to continue the uptrend. First Solar, nothing yet. You're in the bobble type pattern. You do have a kicker type signal. When I say kicker type signal, a true kicker signal shouldn't have a tail to the downside. It should open and immediately trade positive. I wouldn't be long or short right now. If I'd been short, it would have been covered today with the kicker type signal. I wouldn't be going long until you see it close above the T line. If it breaks out, still has this gap up here that could go to. Coffee, same thing. It needs to get back up above the T line to do anything with it. XLNX. There's your bearish left-right combo. Again, notice what happened up here at the top. When they gap it up in an overbought condition, start getting ready to take profits. Right now, I would suspect they're coming back at least to this level and possibly coming back to test the 50-day moving average. NVIDIA, we closed out that position the other day. When it came back up above the T-line, it needed to stay above the T-line. When it closed back below the T-line on Friday, it was time to close it out. I did some day trading on it today because if you look at the intraday charts, that's the 10-minute chart. I was down to the 5-minute chart, and then even down to the 1-minute chart. See what was happening here. You had a big fry pan bottom, so I traded that a little bit, and then it bounced back up again. So I just traded some of the very short-term options on this based upon that if the market was coming back, which it looked like it was doing, maybe it would bring NVIDIA back up. I'll be buying this one back if they can get it back up above the T-line. Oh, for a short, yes, if it does open lower, you can be going short with the anticipation they're coming back down to this level, which would correspond with the 50-day moving average. Wisdom Tree, another one with a little kicker type signal you can buy on positive trading, breaking the downtrending channel. AMGN, this one you can be buying with the expectation they're coming up to fill this gap up here at the 200. MUX, another one of the mining stocks that you can buy this one on positive trading. I'd be more apt to probably buy it above 350, knowing that it broke this downtrending channel. But you can see how they did profit taking back to the T-line, brought it back up. I'd still be buying this one on strength. CBAY. Make sure your volume is good on this one. You can buy this one on positive trading a little Morningstar type signal here. ALJ had a good day, but I think it was because they had the buyout offer, but it's trading above the buyout offer, which means either they're not going to accept the offer or there's somebody else out there in the wings that may come up with a bid for them. So if you're long, you stay long. I had a kicker type breakout. So if nothing else happens, you might have a bullish J-hook pattern. Amazon, we haven't been trading because you can see the wedge formation. So there's really nothing there. So this is, again, why we want to recognize a pattern, whether it's a candlestick pattern or a Western pattern. When you can see that there's a wedge, pretty much tells you, yeah, it's not really going anywhere. When do we want to trade this? When it breaks out to the upside or the downside. When you say we can buy a stock if it trades positive in the next day, do you give specific time frame, like the first hour or 4 hours, or does it need to be positive the whole day? Usually, Tim, if I'm buying something on positive trading the next day, my first criteria is I want to see that the market isn't falling out of bed, that it's still staying up pretty strong. And then I want to see this. I don't want to see it opening down here. That tells me the bulls aren't there. I want to see it opening relatively strong because that confirms exactly what I expect should be happening. That's why we went after Mobley this morning, just on a quick trade, because if it opened positive after the doji, after the best friend, possible doji sandwich, yeah, I'm usually buying within maybe the first 30, 40, 50 seconds or first minute and a half. Now, if the market opens up and the market was down 40, 50, 60 points, and this opened and was just hovering here, maybe I have to wait for 30, 40 minutes to see if the market starts back up again and then see if it starts moving. So that's part of our entry strategy, very simple, the 4 different quadrants on how the market and the stock opens. The wheat fund, haven't been trading wheat or soybeans. They're both just kind of moving sideways. The dollar has been in a nice steady uptrend. You can see the little Morningstar signal here, which is a scoop pattern. I would suspect you're still heading up to the top of this trend channel. And gold, that's not the right one. Gold, as you can see, it's bottomed out, starting to slowly come back up. Yeah, that's unusual, but again, we can get around the usual by seeing what's happening actually, what's going on in investor sentiment. So that's the major advantage we have with candlesticks is we can see what's actually happening. Wow, humbug. Versus what everybody is expecting to happen. NEWR, that one you can be buying on positive trading. Just watch to see what it does once it gets up here. Okay. Where can we find the 4 quadrant? I think somewhere in our products and services, Bob, there's a training video, entry and exit strategies. And we'll probably do that later on in January. We can do the entry and exit strategy session. Okay, let's call it a night. That's right. We will see everybody bright and early tomorrow morning. Again, there's still lots of good positions to get in, make some good money. All right, see you bright and early in the morning.